I think Bitcoin still has another leg lower to 12 to 13,000. I think the stock market likely by end of year or early 2023 will tag the March 2020, well, the highs just before the March 2020 COVID collapse.
Hey guys, welcome back to the channel. Today we have Gareth Soloway forecasting Bitcoin's next move, as well as his take on the economy. Soloway has seen that inflation is so high, no one can stop it. But on the other hand, if inflation decreases, but the unemployment rate goes up, money would start being printed again. Soloway says there is no good endgame in the market. Everything will only destroy the economy in the long term. Soloway says that investors need to be aware that there will be a massive reset where the dollar will collapse. He says that charts always tell the truth because all they show is data, while all media is filled with bias. Let's listen to this interview with Gareth Soloway as he gives his investment advice before the next collapse and predicts Bitcoin's next step. Don't forget to like and subscribe if you enjoy what we do here on this channel. Let's get right into the video.
When you see the dollar continuing to stay at 20+ year highs and it continues to grind up, it just kills all risk assets. And you can actually watch on an intraday basis how every uptick in the dollar, you'll see the opposite occurring in the Bitcoin chart or in the stock charts of the S&P as well. So a lot has to do with the dollar. We have to keep an eye on rates. Remember, as interest rates rise, there are going to be a certain amount of investors that say, hey, listen, I could get kind of a risk-free return of 5% or 4%. Why am I risking my money in Bitcoin or in the stock market when I could lose 20 or 30%? So there's this give and take going on in the market as the market tries to gauge what the heck the Federal Reserve is going to do in this coming meeting. Are they going to raise 75? Is it going to be 50? Is it going to be 100? And again, the market is just trying to figure out the levels. So we have Bitcoin that flushed early today with the stock market. The stock market was down sharply this morning. It reversed because the dollar began to pull back. And amazingly, I mean, gold was down this morning and then gold reversed basically flat on the day as the dollar came in. And you can see Bitcoin rallying up as well. So the key for me is continuing to watch this 19,500 level on a daily closing basis. The reason why that's such an important level to me is if you go all the way back to the 2017 high, that is the high pivot. And that's kind of the level we've been dancing around for a long, long time. So as long as we kind of hover around that level, there's a small chance that Bitcoin can get some sort of bid if the dollar comes in, if the Fed gives some sort of dovish speak on Wednesday that maybe shows a pivot coming for interest rates. So here it is, and what you could see is basically they're following almost in tune with each other. And I think this is so remarkable because, you know, gold, we've grown up, you know, for the past 20, 40, 60 years that gold was a safety play when things got scary in risk assets. But we can clearly see that's not the case here with gold and the S&P both dipping as Bitcoin has also dipped. And again, the charts are very, very similar in terms of their price action. And again, the key here is understanding that it's the dollar that is causing the movement in both gold as well as risk assets like the stock market and cryptocurrency.
Soloway is astounded that Bitcoin hasn't conveyed more strength in the market. This is because Bitcoin usually does the risk minimum at least 2 times when the stock market rallies. This hasn't happened because Bitcoin has floated up due to the fear of investors who have already lost money in crypto scenarios. Soloway believes that it's important to recognize that the current long-term pattern is very bearish. He sees that Bitcoin has the ability to go down another leg.
So the market is trying to price in how much more hikes they're going to do in terms of interest rates, how much tighter the dollar is going to be, the supply of the dollar. And what the market wants to see is it start to curl down, where instead of a 75 basis point hike after this next meeting, maybe they do 50 or 25, or maybe they go on hold. And what that's going to assume, that the investing public is going to assume that that means they're going to go to zero, and then eventually when the economy gets into a bad recession, they're going to start going back to quantitative easing again down the line. Now, it's not for a long, long time, but you absolutely will see that again when the economy starts to really tank.
Before we move on to the other cryptos, just sticking to the Fed a second, you said the bond markets, though, are calling the Fed's bluff. What do you mean by that?
Yeah, so that's such a great one to look at. And again, we had this major, ridiculously hawkish comments from Jackson Hole, from Jerome Powell just a few weeks ago. And still we've seen these hawkish comments that were kind of, you could argue that they were more hawkish than any comments we had ever heard from the Federal Reserve. We know it spooked the stock market. The stock market declined dramatically. And when I say they're calling the bluff, is that the bond market is made up of the smartest money in the world, right? It's the biggest market. It's the smartest money. And what you can see on this chart of the 10-year yield is that the 10-year is just back to where it was in June. And so what that tells you is that the bond market says, hey, listen, we don't think the Fed is any more hawkish than they were in June at these levels, even in spite of Jerome Powell's ridiculously hawkish commentary just at the Jackson Hole meeting here. So again, for me, that's telling me something. The bond market doesn't believe the Federal Reserve is going to hike rates that much more. I think, again, 75 basis points is probably what you're going to get on Wednesday. And then I think the Fed very possibly could be on hold after that. So, for the last year plus, I've been really a proponent of regulation. And the reason I am is that as much as we like the deregulation and kind of this independent currency type thing, if you ever expect big money to come in, and I'm talking about pension funds with trillions of dollars, I mean, just them putting 1% of their assets in Bitcoin would be massively positive for the price of Bitcoin. So I'm coming from the investor standpoint where I want to see the price go up. And the only way you're going to get that is if you get a framework of regulation and people actually know the rules, right? So one of the things in the stock market that I've learned over the years of trading is that the market doesn't necessarily care if it's a positive or a negative. They just don't like not knowing, right? They don't like that ability to not figure out what the rules are. So by getting regulation out there, you create a framework where these institutions can say, okay, now we can play in this field. We can play ball because we know the rules and we feel comfortable investing with our fiduciary responsibility other people's money. So I welcome regulation. I think it's needed. You saw over the last 6 months bankruptcies and shady activities and all this. And investors honestly are scared of crypto in many, many situations. So I think you have to get this regulation. I think that a digital dollar doesn't really solve the problem of what Bitcoin's solving, and that you have this stated 21 million run. That's the essence of it. So it can't be printed like the digital dollar. In fact, you could argue that the digital dollar can be printed even easier. And I understand what you're saying where, will the government say, oh, we don't want any competition? But I think you have to look at it and say, if I was a politician, I would be looking at Bitcoin and saying, you know what, it's more of a gold. Why? So they're not going to ban gold then, but they're going to ban Bitcoin. But to me, it's a digitalized gold. So I don't see that being a conflict. And I think the key is Ethereum and some of these other altcoins, you're going to start to see regulation that lays a firm framework where they're going to be classified as securities. We know Gary Gensler has said that. And therefore, they're going to have reporting rules. There's going to be strict rules to report. But I think they're going to be treated much more like equities than kind of currencies. And so I think you have Bitcoin as the digital gold, and then you have a lot of these other cryptocurrencies that will have to report and be treated much more like equities. So I think Ethereum, right? So you have to look at it as the rally from the lows in June. It was about 100+%. And a lot of that was expectation of this merge coming. And really what we see, and we see this with so many stocks as well, is that people buy into these stocks on anticipation of great earnings, and then they report great earnings, and then people are like, okay, well, what's my next reason to own this? I'm up X amount of dollars. Let's sell it. Let's take profits. We'll revisit this in the future. And I think that's what's going on with Ethereum. As much as I love the merge, and I think what it will end up doing will be a positive for Ethereum, it still doesn't solve the immediate issue of the risk and the fear of crypto right now with the Fed being so aggressive. So you're going to see it come down here. I have a major technical level on my chart around $1,250. You can see it just kissed that level right down here coming from this pivot. If it gets through there, you could retest sub 1,000. But ultimately, again, you get down sub 1,000, and I think you start accumulating this for the long term very slowly because it could go lower. But again, you have to think about the thesis with the merge in the long term, but then understand that fear rules the day in the near term, and that's what we're dealing with the Fed right now in the strong dollar.
Soloway believes there is a very slight chance of making the bottom. He pictures Bitcoin's future as the blockchain equivalent of Amazon. But there's a constant chance of a 95% drop that brings Bitcoin back to 3,500. If Bitcoin gets written down, it's hard to tell if it's worthwhile to dump that position to buy lower. He doesn't recommend exiting the market because a bull run might immediately start, and the risk of investors missing out on profit is too high. Soloway advises investors to choose the path they're comfortable with, but recommends to be sure to dollar cost average gradually and to space out time between each buy. What do you guys think about Gareth Soloway's prediction on Bitcoin's next move? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.